I'm trading stocks and options from $0 all the way to 1 million and showing you every step of the way how I get there. Now, today in the account, we did close at $18,630.76. This was a new record in the account. We started this challenge back in November with $4,000. We were up $1,100 on the day. On the week, we're up $3,500, and on the month, we are back to all-time highs, so $6,500 on the month and almost $8K the last 3 months. So we've crushed the challenge account so far. We're just going to keep growing this. I'm trying to get to that $25,000 to $30,000 mark, and then we are going to change some of the strategy around. But first, let me just give you a rundown of what hit big this week. And then we're going to hop into the charts. And if you haven't already, make sure you guys join this Discord because I'm posting everything in here. A lot of people are making money just following these plays. By no means am I perfect. I'm not going to hit every single play, but we've just been on an absolute heater the last several weeks and really to start this year. So overall, it's been pretty good. I do post everything in here for free, both my positions on my main portfolio as well as all of my positions in the challenge portfolio. I give you guys trade setups as well as just some education and then links to my Twitter and all of those things. But we are climbing back in the challenge account, and really that's thanks to a couple different plays. So, and not my last video, but the video before that, I talked about 3 stocks that were going to report earnings. Those were ZETA Global, FSLY, and Upwork. And turns out all 3 of those stocks reported earnings this week, and they all beat. So first was ZETA, and we took a lot of profit here already. Just to give you an idea, here's a picture of some of the returns that we were getting, over 100, even up to 300% returns on some of these. But ZETA did really well on earnings. It was up 27% yesterday. It had a little bit of a dip today, down 2.82%. We took a lot of profit out yesterday and even took some profit today. But our total return as it stands now in our existing positions is at 65%. And I do think ZETA still has a lot of room to the upside. We made some small bets on like Snapchat that didn't go well and Herbalife, but nonetheless, the really big one that came back for us was Apple stock. I've been pounding the desk on Apple for quite some time. Tim Apple, he finally showed up at the White House. He bent the knee to Trump, and they just had like a dog and pony show at the White House saying he's going to give $600 billion over 3 or 4 years, which I don't know where he's getting that money. Apple doesn't have that amount of money. They only have like 40 to 50 billion in cash. Yeah, so it doesn't really make much sense, but maybe it's just the total economic impact. Point is, it doesn't matter. It's all optics. The good thing is that now people are starting to buy into Apple. They had a really solid quarter of earnings, a lot better than I expected. But you can see here on the 1 month chart, it actually sold off, and then now it's bouncing back up because if you just look at it year to date, it has not recovered. It's still down 11% year to date. And now money is starting to rotate out of the other Mag 7 stocks that made new all-time highs. And what are they looking for? Well, they're looking at Apple. Can Apple actually follow through on AI and then their product roadmap? And if they can do that, then Apple is more than likely going to make a run again at all-time highs, which is at $259. I do think that at some point Apple is going to break above all-time highs, most likely by the end of this year. So I'm playing it accordingly. I took some profit on Apple calls for October, and I still have some positions there, but I do have these spreads open on Apple. So $2,000, we're up $739 so far on these positions, but also did take some profit. So it's not showing the complete picture there. Now, Unity software, I do think this one is starting to come back, but let's just first talk about Upwork. Upwork was around $11.90. I bought a bunch of shares, bunch of options. We have 100 shares. Our total return here is 58%. Funny enough, it actually got IV crushed in the morning, even though it was up like 7-8%. we're actually down on these options, but because we still have until the 15th of August, I decided to hold. Not all of them. I did sell out like half of them because I was like, what is going on with this stock? But nonetheless, we are going to probably hold these a bit longer. Upwork did crush their earnings. They're benefiting from AI just like I predicted. They also made some strategic acquisitions trying to expand their product offering as well as revamp their enterprise side of the business. And those acquisitions are going to help them do that. But they just saw a lot of volume, a lot more GSV, which is just the amount of spend on their platform. Because so many people are doing AI and AI agent runners, there's just way more volume on their platform. So we're up 82% on these. Wish I would have held all 12 of those contracts, but I did take some profit out here already. Really just overall hit on earnings that did really well for me. And then Grab and Neo are starting to bounce back a little bit. Next plays I'm looking at are Alibaba, and I think Apple can continue. And then I'm also running a poor man's covered call, which is a bit more of a advanced options trading strategy where you buy a long-term call option that's in the money and then sell shorter dated out the money call options. So I bought the 17.5 calls and then I sold the 24 calls. So right now I'm up 15.7% on this position, $111. And the idea is that I can continue to sell these call options or even roll them to a higher strike at credits, which I could do now if I wanted to. So just for illustrative purposes, the way that this works is that you're controlling 100 shares with that long-term call option that's in the money. And so you can sell, basically doing a ghetto spread by selling a higher strike call contract. So like I have the 17.5 as collateral against this $24 strike. And so right now, because the share price is at 24, it might close above August 24 by August 15th because we still have 6 more trading days. And if that happens, then I would actually close out of this position. It would sell my 17.5 and then I would cash close the 24 as well and then receive the difference. So I still would make money in that scenario, but more than likely what I'll end up doing is I will roll this position. So I would buy back the 24 call, which I can do for $2.03. Then I would look to maybe roll it to the following week, and I could roll it to the 25, which is only $1 of share appreciation or just appreciation on the stock. I'd probably more than likely try to roll it 22 days and then probably roll it to like 25.5. Or if I think Ethereum is really going to run, then I could try to be a bit more aggressive and maybe try to sell like 27 calls for September, but then I'm just locked into this position a bit longer. So I can roll this position and open up more gains on the long leg of this strategy. So really just an interesting way of not actually buying shares of the underlying. You can control 100 shares by buying a leap, which is only $1,000, and rather than buying 100 shares at $1,750, which would be $1,750 versus $1,000. So that's how I'm looking at SharpLink Gaming, and I do think Ethereum's going to run as well. But let's just get into like what's going on with the market. Obviously, things seem to just be stabilizing. It's really hard for bears to continue and push price lower in the market. We actually closed below this previous uptrend line. So we closed above, and that's like a technical breakout. We haven't quite come back down and retested this like 613 to 614 area, which is also a low volume node. I do think at some point price will fill in this range, and that will most likely be on the next time that the market decides to roll over. Now, it's kind of interesting right now because jobs data they revised it lower, and that's bearish, right? The economy is starting to show some cracks in the job market, and over time, that will eventually accelerate into some sort of recession. The other side of it is like AI and earnings. So you have all these AI companies, and that's why I was bullish after seeing Microsoft and Meta. that we would have a really strong move on ZETA. We had that really big gap up. SoundHound also just reported. That's another AI related company that just beat earnings. We also had Upwork, which is using a lot of AI on their platform. That one beat earnings. Kind of rejected a little bit here in the morning when I was talking about, but then has since bounced back. So you kind of have these companies reporting and showing that there's a lot of strength, they're growing revenue, but then jobs are starting to deteriorate quite a bit. Now, at some point, I do think that the actual economy will slow down at a faster rate than the growth in earnings, and that will lead to a larger sell-off, right? Because if consumers are not spending as much money, then businesses start to see that impact, and so on and so on, and it kind of cascades through the market. Now, on the flip side of that, which we do have CPI data next week, and that will give us more of an idea of are they going to actually cut rates or not. Right now in September, there's a 90% chance that they're going to cut 25 basis points. And in October, there's I think 55 to 60% chance that they're going to actually cut rates again, right? So right now, the majority for the next two FOMC meetings in September and October is that there'll be a 25 basis point cut and then another 25 basis point cut. When the Fed lowers rates, that is moving from, it's essentially financially easing the market, right? Because now people can borrow and lend money, create credit. That stimulates the economy. So the Fed is trying to balance these two things, the job market and rates, because they don't want inflation to go too high. Now, it is a delicate thing, but nonetheless, I don't think that the market can have any extended drawdown until after they cut rates. Because if the price starts to drop here, right, the market's starting to drop, maybe it goes to 608, and that's certainly possible, and you can make money on this type of move. But the market's always going to be looking out into the future, and they're going to be looking for that 25 basis cut that happens in September or October. If it doesn't happen in September, which would be like the lesser likelihood of happening, then most likely the market will sell off in that event. So you can also time it in that sense, right? If the Fed is like, hold on, we're not actually going to lower rates because inflation's picking back up, CPI comes in hot next week, then it's possible that they won't cut rates in September, and then we could have like at least somewhat of a temper tantrum in the markets, and we would sell a bit lower. We'd probably break through this 623 trend line again and most likely come back down into this area between 608 and 613, retest this all-time highs, which is actually pretty healthy, but we could find support here and then start to push again into the actual first rate cut. So a lot to consider. It's very counterintuitive. I'm trying to stay flexible as possible over the next several months. Really, what I'm looking to do is capture as much profit as I can, really only hold companies that I'm bullish for the long term, which, like, for instance, Grab is starting to bounce a little bit, but it did have a technical false breakout, and then after earnings, it sold off. So this could take some time. It could certainly come back down here if there's like market weakness. But long term, I'm just going to keep buying shares and leaps in this company because I actually believe in it for the long term. Now, let's just run through some plays of like what I think is going to happen. There's some quality setups that are coming, specifically around Apple and Tesla. I'll start with Apple. So Apple had this really strong move. Tim bent the knee. Good on him. Finally, they're doing some sort of fugazi thing in the US to just dodge all the tariffs. That's going to be really bullish for Apple's price. Now, it does have this little sneaky trend line that it's going to come up on here soon, as well as this downtrend from December and February highs. So you're going to see somewhat of a, it actually came up here today on the 5-minute chart. You can see it rejected right on that line. So that area is acting as resistance, and that is a moving target. But we are starting to fill into this gap. We also had a nice 1-2 gap ups, which is really bullish. Those are continuation bullish overnight gap ups. Now we're testing this trend line. If we can break through this, we will most likely come up and fill this gap We have this gap that's been sitting here since the initial trade war tariffs were announced all the way back in April. And once we fill that, we will most likely have somewhat of a rejection because we have a gap fill reversal and hitting this previous, more recent upper trend line. We will most likely reject at 224, probably come back down and do that retest. So I'm really looking at Apple. I'm very bullish on Apple. I think it's a great hold for the long term for a number of reasons, just with AI and putting that into their products. Once they figure that out, the stock is going to run. It's also usually does good from a seasonality perspective in the later half of the year around like Black Friday, as well as the holidays and Christmas and all of those things. And people are buying Apple products. It's fresh in their mind. They might invest more money into Apple. So I'm really bullish into the end of the year and even into Q1. But what I'm thinking is that from just a purely technical perspective, how can I make the most money on this stock? Is I already have a position that is open for October, September, and December. What's going to happen is most likely we will break through this, probably reject around 224. I'll probably start to take profit on shorter dates or trim on some of those positions. Then once we come back down and retest this level, I will most likely re-enter because premiums, when the stock is going down, premiums drop more in relation to that move. So premiums will drop a little bit. We'll have this retest. As long as it holds that 220 area after breaking out, obviously first thing is get through the breakout. We could certainly just reject here if there's some other thing that happens. But we reclaim this uptrend on the red line. We're now testing the downtrend. We're kind of trapped in this area. Maybe it pauses for a little bit, but I'm going to be looking to buy on the retest of the breakout. I think that is the most, I guess, just the best possible entry point for you to actually make and get the best entry on contracts. And I'd be looking at a few different levels. Now there's a low volume node at like 226. I'm not too concerned about that. Even like this 225 area. Like we're probably going to reject around that area first. And then what I'm looking for longer term is this move up to 232.98. As you can see, it's rejected there in the past multiple times. Price likes to make this really strong move up into that area. So that'll be my first profit target after re-entering into this position at 232.98. 237.10 is also a resistance area. As you can see, it's rejected from there or found support multiple times. But this is a low volume node. This is the start of a low volume area. And then if it can actually secure over 237.10 and flip that from resistance to support, we are going to see a stronger move up towards 241 and then most likely up here right around 247, right? So you have two rejections there, two support line bounces there. So, and then of course all-time high. So those are all the price targets. This is probably going to take some time to play out. Obviously, you could just be like loading December dates up to 230 to 240, and those are not too expensive. You could see this move happen a lot sooner than that. But really up to you on how much risk do you want to take for how much potential reward there is. Obviously, give yourself enough time for this pattern to actually play out. A good way of thinking of it is how long did this pattern actually take to build before it can get back to all-time highs, right? And so you could technically go, well, maybe it'll break out here today, and then if you just drag this, let me grab the right line. You drag this line over to where this is, and you can see that, you could come out here into the future and assume that maybe it'll take that long until March of next year to actually hit all-time highs, right? The pattern that it takes to build takes the same amount of time to get to the top of the target. You could think of it that way. That is a very conservative approach. In my experience, usually when you have a breakout with this much compression on a stock, with especially Apple, and then potential headlines, tailwinds with holidays, I think that this move can probably happen a lot sooner by December, January of next year. So that's what I'm looking for on Apple. Really solid overall. We'll skip to Tesla because this one is really interesting. I'm actually playing 1 day to expiration call options. Today's Thursday the 7th. Tomorrow's the 8th. We are trying to really this is a huge consolidation pattern after breaking the initial downtrend, right? We played this move, then we played after it broke through this consolidation. We played this and it broke through all the way to 365 and we made a lot of money. Now, Tesla is forming an even larger consolidation pattern, right? So you had this big drop, it came back down, retested that. Now you have two reactions here. What I'm looking for is a break of this upper trend line. Once that happens, it's kind of like the same thing with Apple, right? We're going to see a move back to 365, 360 to 365, right? Because we have this low volume node here and here. This also is where we previously broke out all the way back in December, right? Around 360. And then we also rejected here back in February. So like getting through this area between 360 to 365 is extremely important for Tesla. If it can flip that into support, then there's not a lot of volume up here. And you're going to start seeing a lot of like quicker moves up to 405, 415, 430. And then of course, like we have a chance at all-time highs. Now Tesla's earnings are like, they're not selling as many cars, but really the story here is robotics, fully self-driving, AI. I think at some point Elon is going to take XAI and try to consolidate that into Tesla so then he can increase his ownership in Tesla, but also just focused on how does he actually switch, right, from a car manufacturer to all of these other things into the future. He's making a lot of big bets. He even just said the other day that if you put 150K into Tesla, it would most likely turn into $1 million. He didn't say how long that would take, but we can definitely be a lot smarter here and just trade in and out of Tesla when it makes sense. And right now I'm just in some 1 day to expiration call options. I hope we can try to push towards this 332 level. If we can flip that 332 level, which has been somewhat of this point of control in this larger pattern, that is very solid. And then of course, if we can hold over this orange trend line, that is going to be a breakout. And then we're going to see this move up to 360 to 365. Tesla, when it wants to move, it moves very fast. So I'm really starting to just focus in on Tesla, keep an eye on it. If it starts breaking through these levels, I'm going to be playing maybe weeklies or monthlies. I don't like to play Tesla for too far out unless I just want less risk, but it's more about choosing the right contract, the right amount of dollar risk for the right amount of reward, because once Tesla moves, it does move very quickly. Now, just to give you a quick breakdown of some of these other stocks, ZETA, I did buy a bunch of shares in, as well as I took a bunch of profit on August and September dates. I still have December call options. So I'm still long in this position, and I think it can go higher. Now, it had the big move. It actually popped up this morning, and then it came back down and retested that earnings gap, and it held. So that's really solid. This 1955 level is a low volume node. It might take some time to fill in that area. Most importantly, it invalidated this bear flag that was forming, right? So you had this like up channel that was forming. Usually you would have like a rejection here, and then it would probably come back down, and maybe at some point it would actually break down. But earnings went really well. ZETA was definitely oversold after this short report back in November of last year. And then now what you're seeing is a hold of 1955. If it can hold here, then this next level that I'm targeting is $22.73. I'm hoping it can make that move so I can actually just take a bunch of profit on my September dates, maybe even some on my December dates, because what we have here is this upper trend line on this really large, longer term broadening wedge. And this area will most likely act as some sort of resistance, right? You're going to have a lot of downward force around this area, and it might reject. Now, I'm still going to probably hold some December dates because we still have a lot of time until this green bar. And so you'll see all these candles populate. And if it does break out above this broadening wedge breakout point around $23, then, sky's the limit, right? You could see 26 very quickly. You could even see a move up to 28. As you see, price has moved pretty quickly in the past. And so we're trying to see the same sort of movement here and maybe even try to get an actual breakout of this downtrend. So, ZETA did really well. The CEO was really hyped. All good things. I do think that what I'm looking at here is just holding some contracts, maybe enter into a few. Choose later dates because you want this play to develop. Most likely we'll try to make a move towards $22.73. There is a lot of hype on this company on social media, which makes me really like the stock. And just look at all that volume. This was the most volume the company has ever done in a day. It was 47.3 million shares traded yesterday. And just to give you an idea, there's 186 million shares float. So quite a bit of shares traded hands yesterday. And I think this stock has a lot of interest in it. You just see how much volume has been showing up over the last several weeks. Now, Alibaba, I've talked a lot about this previously back in December where I was really bullish on China. You had a bunch of firms enter into Alibaba and had this crazy run up and everyone was boasting about I chose China and it was all great until, Trump started tariffing. There was the whole back and forth with China. But now we are consolidating, right? Alibaba has just only grown much larger and larger over time. If you look at it here on the weekly chart, at one point it was trading for $320 and it has sold off. But if you look at its financials, it's pretty much only grown over time. Here's on an annual basis. 2023 didn't do that well. Growth has dropped quite a bit, but it's $138 billion in revenue with $18 billion in net income. Free cash flow is about $11 billion a year. And then if we look here at cash, they have, let's look at it on a quarterly basis, $64 billion in cash. Their net debt is basically $30 billion surplus, right? So overall, very well-positioned company. Charlie Munger, who is Warren Buffett's right-hand man, loves Alibaba. Unfortunately, he passed away. But I do think that he unfortunately didn't get to see this investment play out because Alibaba is coming out of a very long-term bottoming pattern. You can see here that for 4 years now, it's been just on the floor, just chopping around up and down. Now it's starting to get some more volume and trying to break out. We had a lot of volume back in February as well as April when it sold off, but volume has been pretty muted the last several weeks. You have this gap down that formed back in 2021, which is acting as a really strong resistance supply zone. So price got up there and it rejected, and I took a lot of profit because I knew that it would most likely reject in this area. You can see it's also a low volume node. But at some point, I am a firm believer that Alibaba will break through this 157 level. It will fill this gap. And once it fills this gap, it will most likely not only reject again, but because it is filled, it will most likely come back up and start to push through it because bulls are starting to win. All that supply is being taken out. And I think bulls are going to step in on this and can try to force this stock much higher. But what I'm playing today is some shorter dated call contracts. It has earnings next week on, is that the 13th? That's Thursday, the 14th. A lot of China also reports next week, but I don't think all these hedge funds and institutions are abandoning China. They're probably just accumulating more. I think it just got a little bit over its skis back in February and March. It broke out of this bull flag. It had a false breakdown of this uptrend. Now it is breaking out of this downtrend and holding on the retest. So I've been buying more and more BABA shares and call options for this year all the way up through December 140 calls with the idea that we're going to come back up and try to test this 143 level. Hopefully earnings go well. They're heavily into AI as well with their own LLM, Quen. So overall, I think they're going to beat. I hope so. Usually Apple and Baba like to run together. They're also partnering. So I hope that Alibaba can make that run. Neo, I'm just like selling covered calls on this one. This one's an interesting one. It's still holding pretty well. So I think that this one can try to continue to push higher over time. So that's another big position in the portfolio. But really what I want to talk about, and we'll end the video on this, is Unity Software. So really I'm trying to reward the people who are able enough to watch through the end of this video. But today, Unity Software saw an enormous amount of call option activity. And this is really akin to every time the stock has made these really big runs, not only back in April when it was trading at, $14 to $16 and it ran to 28. The CTO left on that day. It killed the stock's momentum. But then right here, back in early July when it was around $24, you saw the same kind of activity, right? Where there's like 10 to 20K blocks of short-term call contracts slightly out the money, which is very important because our boy Roaring Kitty is in these 30 calls, which has been like a backstop on this trade. Ever since we got through $30, it's held above $30. We had a really strong move. Earnings actually went pretty well. The CEO's a spin doctor. He said a lot of great things about the company and what he thinks about Vector, their ad tech platform, which is like what they're betting on for the future of this business. But nonetheless, we came back down. We filled this gap. I took some profit here on some shorter dates. Then I bought back in on some longer dates as well as some shorter dates when we filled this gap. So we finally filled the gap and then we reversed out of it. Now we're back to $33.57. There's been a lot of bullish activity on the options chain. And I can actually just show you here. So this is what I'm talking about. So you have these 34.5 call contracts, August 15th, which is next Friday, and you just see like 18 to 20K blocks. Well, this was like happening all day. They were just spamming these, right? And this is like the same thing that happened in those other runs. And so what I think is going to happen is Roaring Kitty, who has like 70,000 open interest contracts on the 30 calls for January, I think he is actually also buying these shorter dated contracts, or maybe a hedge fund or institution is, because the whole options chain is just so loaded with call contracts that you can bridge gamma and force option dealers to hedge by buying the underlying shares. But nonetheless, what I'm playing is buying shorter dated call contracts because, and what I think is that over the next week, potentially even tomorrow, since it's Friday, you could see somewhat of a gamma squeeze up to 35, even up to $40. If the Roaring Kitty does tweet like he did with GameStop last year, I think this stock will at least go up 100% from whatever price that it's trading at. Now, it's certainly possible this could even go up more, but nonetheless, I'm going to make a ton of money, so I don't really give a shit. But really what I'm looking at are a bunch of these different levels, 44, 50, 58, 65, 72. This could even push higher than that. Obviously, it traded at much higher levels before, but like I said, there's no volume here. So we could certainly see a move to $100. I'm going to be scaling out of the position, taking profit when this move happens, because you don't know when the company is going to dilute shareholders and kill the stock price and take money off the table. Same thing with GameStop last year. It only ran for like 2 days. It kind of bottomed out, and then Roaring Kitty started posting his position again. So it might actually happen in 2 waves. I'm not quite sure yet, but I will be posting about all of it in the Discord all the time for free. So hope you guys enjoyed this video. Make sure you guys like, subscribe, and we're just going to keep building, stacking that paper, guys. Let's get it. See you in the next video. Peace.